Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is healthcare and real estate investment expert Joe Caltabiano. Now, Joe's the CEO of Healing Realty Trust, a data driven, self managed real estate investment company with a portfolio centered on purchasing healthcare related real estate assets dedicated to serving the mental, behavioral, and physical health sectors, as well as in the advancement of innovative and emerging psychedelic therapies. Now, the company recently announced it has closed its first tranche of its $25 million Series A funding round. Now, prior to HRT, Joe founded JSC Fund, a family office aimed at uncovering and advancing opportunities within regulated industries. Now, before launching this fund, he co-founded Cresco Labs, one of North America's largest vertically integrated cannabis operators. He helped grow Cresco from a startup to a multi-state operator with annualized revenue over $250 million and operations in 9 states. And so without further ado, I'd like to welcome Joe to the show. Joe, how you doing today?
Doing great, Kevin. Thanks for having me, and I appreciate the kind intro. You make me sound pretty important.
Yeah,
So
no,
thank
I
you.
think you are. I mean,
Flattering.
well, here's the thing, Joe. I didn't even go fully in depth of your background. So what I'd love to do, I feel like that was somewhat brief to the experience that you bring to the show today. And so what I'd kindly ask you to do for those that aren't familiar with you and you know your background, what it is you do, take a few moments, fill in the blanks for us, and tell us a little more about yourself.
Sure. Yeah, I was born in upstate New York, went to college down in Florida briefly, but my background is really centered around real estate from a very young age. I moved to Chicago early in 2000 and quickly got involved in the mortgage banking space. Got involved with a company called Guaranteed Rate, which is one of the largest residential home lenders in the country. I led the origination side, was one of the top loan originators for many, many years there. Did about $3 billion in residential and commercial funding, and really cut my teeth on understanding credit at that time. So I was with Guaranteed Rate up until 2015. During that time, and on a personal note, I had leukemia when I was a kid. So being a survivor of childhood leukemia, I've been very involved in the cancer philanthropic side and watched kind of the evolution of oncology treatment, specifically how it interacts with cannabis. And I was starting to see doctors and nurses, especially on the palliative side, talk more and more about the benefits of cannabis as it relates to treating some of the symptoms of cancer patients. At that time, Illinois passed a law regarding the compassionate use of medical cannabis, and myself and a few partners got together and formed a company called Cresco Labs, as you mentioned, in 2013. We were awarded our first licenses on the grow and manufacturing side in Illinois in 2015, raised a significant amount of capital, and built one of America's largest cannabis companies that we took public in 2018. I served as president, running all revenue generating activities, wholesale, retail, brand strategy, site selection, construction, anything that made us a buck kind of fell under my purview. And then, was fortunate enough to kind of retire in 2020 and move to Florida, put my feet up, catch up with my family and kind of get a grasp back on life that I kind of, you work 100 hours a week building up any type of startup, as I'm sure you know. And then was approached about a pretty unique idea that marries a lot of my skill sets, which is Healing Realty Trust, which we'll get into. And one side note on the cannabis side, what we found was when you launched that operating company, Cresco Labs, there was no commercial infrastructure that existed also. So we had to build a property company alongside that operating company, which we ended up selling off those assets into a REIT called IIPR, which is a REIT that's publicly traded on the New York Stock Exchange that's focused on the cannabis space. What's interesting and where you'll see kind of some of these segues go is IIPR has outperformed all of the cannabis operators, which goes into your story here and really a story that's built, the fortunes of, 50% of America's wealth is bricks and sticks in the real estate side beats out operating companies 9 out of 10 times. So you'll see from, the real life proof of myself, as well as I'm sure things you've talked about on your podcast, or I've heard you talk about on your podcast, is real estate is where the wealth is created, where the long-term value is created, and where you can see those regular passive incomes or, significant upside from exiting deals along the way, all while you're building a very tangible asset base. So as we shift now into kind of HRT, I'll kind of lay in how that story goes along the same strategy too. So.
Yeah, no, I appreciate that, and yeah, so I would love to hear kind of the pivotal moment in time. Obviously, you moved to Florida with your family, got called back up, probably played a bunch of rounds of golf, realized that being retired is maybe somewhat boring. Maybe you weren't working your brain as hard as what you had done historically. An opportunity presented itself to you, and so let's start there. Let's talk about HRT and how your past experiences, your expertise, your knowledge played into this new endeavor, but more specifically what this new endeavor is. I mean, what is the niche within the marketplace that you guys are
Sure.
looking to fill?
Yeah. So, I've always had a mission-driven focus in business, right? And on the cannabis side, it was easy to parlay that into oncology and kind of the betterment of human development and health and wellness and all of those things. What you're seeing now in the country is, a lot of people take a lot of different pills to treat a lot of different conditions that unfortunately, society hasn't treated that well, right? Mental and behavioral disorders, it's terrible. The treatment that exists in the United States for depression, for some of those things, it's like take this pill until that one doesn't work, and then try this one, and then try a combination of these, and we don't know what the side effects are. What you're seeing now is an evolution towards psychedelic assisted therapy that is really getting to the root cause of many of those problems, right? It's not putting a band-aid, which is what a lot of the current treatments are for mental illness. It's actually getting to the root cause, lowering kind of your resistance to talk about that. So combining medicine with talk therapy is this new form of treatment for mental and behavioral health. That's kind of how HRT was initially presented to me, was we were going to go out and fund the infrastructure and the real estate side for clinicians who will be expanding these forms of treatment. Because as you can imagine, these forms of treatment are longer duration therapy. The current, treatment with a psychiatrist or psychologist is a 30-minute talk session, and then you go get your prescription and you go to Walgreens and take the pills, right? And then you come back next week. These new type of treatments that I'm talking about with psychedelic assisted therapy, such as ketamine and inevitably MDMA and psilocybin or magic mushrooms, they are much longer duration therapies. So ketamine is administered in clinic. It's a 2-hour therapy session that coincides not only with the treatment, but the talk therapy alongside it. MDMA therapy is 6 to 8 hours of treatment.
Wow.
So as you can imagine, the infrastructure that's in place for these clinicians doesn't exist, right? You can't spend 6 or 8 hours in one little 8x8 room with a leather couch in there. You need a bathroom, you need the right lighting, it needs to be soundproof. There's certain things that need to happen on the infrastructure side. And when you look at the scale of the number of people with mental illness, just PTSD alone is 10 million people, and that doesn't count children. When you look at the veterans that are going undiagnosed and all of these different categories of disorders that are out there, this is a very large segment to the tunes of 20 to 30 to 50 million people who suffer from some level of depression, PTSD, or some combination thereof. So there's a lot of infrastructure that needs to be built out. Again, having been on the leading edge of medicine with cannabis, and there's some parallels that I'll draw, and there's some that are not, because HRT is federally legal. Everything we do is federally legal. Ketamine is an approved drug that Blue Cross Blue Shield covers, that the VA insurance covers. So these are things that are federally legal, unlike the cannabis industry. And there was that kind of juxtaposition, especially with banking and finance, where it was very hard to navigate through cannabis. This is a little bit different. This is federally legal. And we're out there building the infrastructure to allow access for these clinicians to provide these therapeutic treatments in parts of the country that don't exist, right? There's ketamine clinics currently in New York City, but there's not one in Rye, New York. There's some in Miami, but there's not some in Naples, Florida, right? There's these markets and pockets that don't have it, and everyone needs access to mental and behavioral health treatment.
Yeah, very interesting. So you're speaking to ketamine, you mentioned that that's federally legal and accepted, even by insurance companies recognize it. How about psilocybin and MDMA? Are they are they working their way there, or?
Yep. So right now, MDMA is on a fast track to becoming federally legal. There will be kind of a decision made in early August whether or not that gets rescheduled to a Schedule 3 drug, which is really for our purposes the definition of federally legal, right? That's like Tylenol with codeine, unlike drugs that sit as a Schedule 1 that has no medical value. So ketamine has gone through 2 phase 3 trials and passed with wild success, 70+% success for treatment-resistant depression and PTSD. That is light years ahead of some of the drugs and treatments that are out there today, like Paxil, which is an 11% efficacy rate. So all signs point to MDMA becoming legal this year. We'll see. It's the federal government. There's a lot going on there in case people don't know. The administration that currently is in there, this is a bipartisan topic because it typically revolves around our soldiers and PTSD, and you're seeing somewhere between 20 to 40 veterans a day commit suicide. So there's a real problem from the PTSD side. So it does have bipartisan support. It is a new therapy that is working its way through. We hope to see that become federally legal this year. If not, it'll get pushed to next year and some of those things. Psilocybin's a little bit further behind. That is more on a state-by-state basis, similar to cannabis. So right now, we're not funding the infrastructure build out of anything that is not federally legal. But for us, we see a pathway not only today with ketamine, which has gone from 0 clinics 5 years ago to 2,700 clinics today.
Wow.
And the top drug is a drug called Spravato, which is owned by Johnson & Johnson. That drug is an intranasal ketamine spray. And that went from 0 revenue 5 years ago to now it's what's called a blockbuster drug, which means it's on pace to do $1 billion in revenue and is one of their top performing drugs. The big difference, and you'll see these studies out there, is the more clinics that are available, the better that drug performs. So now you're seeing the importance of these clinics opening and the infrastructure out there to give more access because these medicines are working on a different level and a different scale than some of the other treatments that have been out there previously.
Very interesting. You just answered one of my questions. I was curious to know, what the large pharmaceutical companies, what are their thoughts on this as far as, alternative therapies, and especially given the fact that, there's wide acceptance of it. I'm assuming they had a major role in actually, helping get it federally approved. But what is their take on some of these other alternative therapies? Again, MDMA, psilocybin, are they in support of it?
Sure. Yeah.
Anything to where they can make a dollar.
Yep.
Again, I hate to say it in that manner, but like anything they can make a dollar and they see success written on it, they're probably in support of. Is there and with that, is there any are there any negative effects that having these large pharmaceutical companies involved? Are there any negative effects or negative outcomes as a result of having them involved in this alternative space?
So I'll answer it a few different ways. You're absolutely right. It's dollar driven. And the number one reason these companies have not supported it in the past and now are supporting it is because the drugs that I was talking about, Paxil and some of these other drugs, their patents are wearing off. So when drug patents wear off, they become generic. The value to the pharmaceutical company goes away. So now these drugs will be made in Canada or China or wherever, and the revenue that they'll generate will be cut by the hundreds. So they won't be the blockbuster drugs that they were before. So they're searching for new ones. These drugs check those boxes. So now they have a new crack at a new patent for another 10, 20, 30, 50 years, whatever the drug patents run. And they're all different depending on the type of treatment, et cetera. But that is what's driving this. So yes, the big pharma companies are absolutely interested in this. The country as a whole has accepted mental health in a much different way, right? There's now paternity leave. There's all these different things. There's mental health days. There's mental health challenges. There's much more acknowledgement of, not only do we need to keep our physical body intact, but mental and behavioral things need to get checked out as well. So there is a big push from corporate America. There's a big push from the pharma side for these new drugs. And when you introduce a new drug, they have to identify what condition it's for. So I've mentioned PTSD and treatment-resistant depression. Well, ketamine now will be used for things like step-down treatment for alcohol abuse disorder, or there will be other indications that get added on to the accepted use. So for us, and where we see this real opportunity is there's a clinical use today and a clinical need today for this infrastructure. And then tomorrow, even within ketamine, you will see new uses and new disorders that ultimately get approved to get added onto that label. So that will expand the asset need, or the need for more real estate.
Yeah.
Then tomorrow, because it's impossible to predict when the federal government will approve MDMA or the next drug, but we do know that coming down the pike will be more psychedelic assisted therapies. And what's come out in all of this testimony is they've made it abundantly clear that these won't be drugs that you're going to get at Walgreens. Since the opiate problem in America and disaster in America and the abuse that came with that, the general consensus is these drugs are dangerous if not used in the right clinical setting. The opportunity for what one would call abuse, some other people would call self-medication, but somewhere in the middle lies the truth, is these drugs need to be administered by a professional. So they will be administered in a therapeutic session for the foreseeable future, which again, for us, creates this opportunity in this white space where big REITs aren't taking advantage of this. It's not big enough for the big giant REITs to do this. So it creates an opportunity for myself and my partners in Healing Realty Trust to kind of wedge our way in and create this opportunity that we feel will continue to grow. And, we'll be able to scale this up to $1 billion in AUM over the next 4 years.
No, that's exciting. So let's talk about the business model and what exactly it looks like. I mean, are we talking about acquiring existing, medical office properties and then, revamping them, or are we talking about building from the ground up specific to the end users' needs? Or again, just help us, I guess, and then maybe the second part, the original part of the question should have been, of what the current, healthcare facilities look like today. What ultimately needs to be changed? Like you'd mentioned, like the 8x8 room with just the leather couch, right? Like that's not really conducive to having a 2 or 3 hour, 3 hour therapy session. So what does that new space look like in order to support these additional needs?
Yeah, and my job as CEO is make sure the company is constantly evolving. And when we started, and when I started with this, the concept was only do these type of properties, right? Freestanding, behavioral disorder treatment centers, and a very niche market. What we have found is medical office right now is being unfairly attacked in commercial real estate, where you're seeing cap rates rise unprecedented levels. You're seeing values compress at unprecedented levels for no reason other than commercial, capital C commercial real estate is just kind of on the outs with the American investor, because retail has underperformed, because you're seeing large office vacancy, and medical, which is performing very well. It isn't disintermediated by work from home. You still have to go to the orthopedic to get your shoulder looked at. You still have to go to the dentist to get your braces put on. You still have to go into a doctor's office, maybe other than like a general practitioner where you can zoom in for a strep throat, or some cold diagnosis. You're still going to the doctor. So medical office is still performing very well. The businesses are performing well. The leases are maintaining, but you've seen this beat up in that sector for no other reason. So what we've started to do, and the focus of Healing Realty, is we're out acquiring properties between $3 to $15 million, in general, multi-tenant properties, not so much in the major MSAs. We're not buying in downtown Chicago. We're buying in Oakbrook or Northbrook, some of the large suburban areas and the suburban corridors outside of the large metropolitan areas. The reason we do that is because commercial, especially office, is having such a problem with vacancy. We're concerned about the vertical side of those buildings converting into whatever they need to and leasing up at pennies on the dollar. Whereas the large suburban corridors near the hospitals, so we try to be within 5 miles of hospitals, you're also seeing medical services being pushed out of hospitals. You don't go to the hospital to get well anymore. You go to the hospital if you're critically ill. Like, you no longer go to the ER, you go to the urgent care. Your GP is no longer at the hospital, he's down the street in the medical office building. So we want to be in those large suburban corridors near the hospital, where we feel there's a very low vacancy rate for medical office, we can go out and buy these $3 to $15 million properties, which sits below where the major REITs are playing. And we can buy buildings that are 80% occupied rather than having to find something that's 100%, because we've gone around the country and signed marketing agreements or preferred real estate agreements. We call it PREP, Preferred Real Estate Partner Program, with a lot of these ketamine operators. So as we go out and buy a 50,000 square foot building that has 7,000 square foot vacant, we're still buying it at a 9 cap to start. So our entry point is still a 9 cap. With us, we know we have a tenant who wants 5,000 or 7,000 square feet for this type of therapy. We're comfortable with their business model. We've already underwritten them as a business. Maybe this is their third, fourth, fifth location. And we're coming in and saying, hey, we'll give you a screaming deal, because now we've taken that from a 9 cap to an 11 cap on a medical office building where we can get 70% leverage still. And we're creating immediate cash flow on a very solid asset that now we've improved the WALT to take it from, maybe it had a 5-year WALT. Now we're signing a new 10-year lease. So we're blending that WALT up to 6, 7, 8 years. Our lenders love it. It gives us maybe a quarter turn lower on rate, and we're building scale. So that's a lot of words to kind of give you how this is all structured, but it comes down to the thesis that we can buy the real estate right. And if I were to leave anyone with one point, you make money buying real estate. You don't make money selling real estate. You have to buy it right. And you're in the market right now when other people are not buying. These type of properties we're looking at, this $3 to $15 million buyer is usually a local investor who loves the corner of that corner and that corner in the town that they live in. That's quite frankly who our sellers are. We're seeing a lot of aging sellers who've taken great care of these properties, but now they're 70, 80 years old and they're ready to retire to Boca. So they're exiting their portfolio in the Northeast or in the Midwest, and they're ready to move on. They've seen their values get beat up by 30%, but they've taken great pride in these buildings because they see these tenants in church. They see these people at their local grocery store. They have a pride of ownership for a long period of time for these medical office buildings. And we can walk into a turnkey investment that is below replacement cost, is close to fully tenanted or at least rent stabilized. And our value is bringing in the value add strategy is bringing in tenants that we already know run good businesses.
Yeah, no, that's great. I appreciate you sharing that. And, just curious, are there currently more ketamine operations that are basically seeking space than space that's currently available? I mean, so is there a massive supply demand imbalance right now to where literally if you find the building at the right price, it has vacancy in it in these, secondary or the suburbs of these larger MSAs, that inevitably there's someone looking for that space specific to this industry?
Yeah, absolutely. What we're seeing, and I'll try to say this as fragile as possible, but doctors aren't in general good business people, right? And that take that as you may, they're very intelligent on the sector of the world that they understand, right? They went to school to be a doctor. They didn't learn how to balance their checkbook along the way, much less buy real estate, redesign it, repurpose it, do all of the things, get the permits, and do all of those things. So these clinicians that we're talking about are looking for turnkey solutions. So there is a shortage of purpose-built real estate for these type of clinicians or practitioners around the country. So for us, yes, there is a supply-demand imbalance, especially as you look at the type of property that we're doing and us willing to put the $100,000 in TI. It's not a $500,000 build out on a 5,000 square foot property. It's a relatively modest TI build out to make the rooms a little bit larger, maybe add a bathroom, but it's not a massive change to the existing footprint. But then we can provide a turnkey solution to a doctor his focus is treating patients. It shouldn't be finding real estate. It shouldn't be working with an architect. It shouldn't be that stuff. It should be helping the betterment of society with the skills that they do have. And then you're also seeing medicine in general has started to sell to private equity, right? You're seeing a consolidation of orthopedics. You've seen a consolidation of dental practices. This will be no different. So there's kind of a race for these type of doctors to go out and get to scale. So if you've got something in Columbus, Ohio, you now want to go into Dayton and you want to go into Cincinnati and you want to dominate that Ohio market. because then you're the player of scale who will ultimately get acquired by private equity. So there is a kind of a rush to stabilize this industry. And then for us, and another piece of commercial real estate is obviously I would much rather have some large PE firm with hundreds of millions of dollars on their balance sheet be my tenant than, John and Bill Smith, who are wonderful people and run 4 businesses, but his aunt is the CPA too. So their books aren't as tight as
Sure.
some of the large private equity firms that are out there and running these businesses.
What does the evolution look like for these operators? Again, right now we're speaking of these ketamine clinics, and this also kind of ties into the build out of the space. Are most of these ketamine clinics of the mind, like, let's talk to MDMA. Once that gets federally approved, are most of these ketamine clinics going to also accept the MDMA as a therapeutic drug, and like they're going to offer both, or do you think it will be a standalone type of clinician that offers those other types of alternative medicines? The reason why I ask that is, what does the evolution of the build out look like? How you're
Yeah.
building it out today for the ketamine clinics. Will it also support those other uses?
The builds we're doing today, we anticipate for tomorrow, right? So it is more for the MDMA. 2 hours you could live on the leather couch if you had to. 8 hours you definitely could not. So it's more of a need for the tomorrow medicine. Um, the general business philosophy for these psychiatrists or psychologists or these clinics that we're talking about is the drug is just another tool in the toolkit to treat the patient with the appropriate medicine that they need. Much like an oncologist, right? They have access to 100 different oncology drugs. It's up to them to make sure they're matching that drug with the right problem at hand or the right diagnosis. So, they will have their stable of traditional prescriptions that they think will work for someone, the ketamine side, and then inevitably they'll get their training on MDMA and whatever tomorrow's medicine is. The goal of a good doctor, and I put good in parentheses, but is understanding the drugs today can always improve. It's up to them to educate themselves on the future treatments, but then also that there is no one size fits all. It's not just that prescription that the guy who trained you gave to that person. It's what is the right treatment today for them. So,
Yeah.
the hope is they're constantly evolving and they're constantly learning new treatments to add on to their toolkit to provide their patients with the absolute best outcome, and not letting something like the infrastructure in their real estate be the prohibiting factor for them not giving you or me the right treatment. It's because you didn't have another 400 square feet to give, so I used a different drug. Like, that can't be how our medical system works. So it's providing them with all the tools at their disposal, and then also enough space to make sure they can treat people as needed.
Are there any regulatory risk either with current administration or future administration as it relates to just reversing some of the progress that has been made in this space?
There's always regulatory risk when you have an administration change, right?
Yeah.
You will see changes at the heads of the departments for all the different things, whether it's your roads or your medicine or whatever the case may be. The good news here, or terrible news, however you want to look at it, is with this being a very much a veteran driven diagnosis, PTSD, and not that it's not first responders or survivors of domestic violence or gunshot survivors or whatever the case may be, but unfortunately veterans play a big part of PTSD. Veterans in general is a pretty bipartisan issue that we want to help our vets in a better way than has been done in years past. So typically, regardless of the administration, you see a pretty positive approach. All the bills that have gotten introduced regarding psychedelic assisted therapies are bipartisan. So fortunately, it shouldn't be a partisan issue that this administration is quote unquote better than that administration, because they do all try to take care of the veterans, and rightfully so. So we do see it as being progressive in any manner. You hope it doesn't get politicized. You hope it always becomes what's in the best interest of our vets. And you do see that. So, regardless of the side of the fence you sit on or which one you view maybe helps the military better, they all want a healthy military. There is no leader that doesn't want the best possible scenario for our vets abroad and then, our vets at home too.
Yeah, agreed, agreed. So let's fast forward 4 years. I think that's the timeline you kind of laid out in the beginning, getting to $1 billion of AUM. What does that look like? And then, once you hit that mark, what's the future hold?
So, real estate's all about scale, right? You've
Mhm.
got to build the infrastructure first, and then you create this machine that you don't need to add many more bodies once you've got your infrastructure in place, and it becomes about buying maybe portfolios rather than just buying one-off properties. So, I hope the evolution for us goes from, buying in this 3 to $15 million range to kind of increasing that up to, 30, 40, $50 million properties over time. And then I hope it's buying some pools of property to really expand our scale. The again, best laid plans, who knows how it shapes out, but I view that being a public company would be the best thing for Healing Realty Trust because the cost of capital should get cheaper as you become a public company. Myself
Yeah.
personally, I've had experience in public companies. I'm comfortable in that space. I've arranged capital at large scale and as a public company. So if capital markets are there, if REITs kind of come back into favor in the public markets, I see us being a public company at some point over that time
Mhm.
horizon. There's a lot also that can happen along the way. You've seen a lot of REITs out there, and maybe we should talk a little bit about REITs, right? They have to distribute 90% of their free cash flow, so it's a very attractive passive investment for
Mhm.
people. With that being said, REITs have kind of fallen out of favor along with a lot of commercial real estate just because of large vacancy rates and some of those things. So if all of that lines up, you may see some of the larger REITs who are not proactively buying and they're kind of rebalancing portfolios or exiting parts of their portfolios. We could become a target for them. We could become a buyout target because as we're forward thinking and we're foot on the gas, they're not. They're all playing
Yep.
defense right now. So as we build a good portfolio that kicks off a very attractive yield, and as interest rates come down, and I'm not here to prognosticate of how fast or how far, but we're certainly at the high end of the yield curve. It's going to come down, and we can argue if that's in a month from now or in 24 months from now, but
Right.
this is a long duration buy for us. We're buying and holding. We're putting debt on right now, and that debt is expensive compared to the last 3 years. But if you're buying at a 10 cap and you're borrowing at a 7, it's still a beneficial type of
Yeah.
arbitrage. It's more attractive and our yields get better if that debt goes down to 5% or 4%. So as we buy and as we scale up, we expect to be able to lower our cost of capital along the way too. So this is a machine that you just turn on and you hope you add to and you hope you buy right and you hope you diligence things in an appropriate manner. Fortunately, we have a great team that will do that. But the goal for me is to scale this thing up and grow it to be one of the larger REITs that sits out there. Um,
Yep.
I don't see anything in the future that will derail us other than maybe somebody coming in and buying us out because they haven't been spending the money on growth. They've just been playing defense for a long time.
Yep. Yep. No, that's exciting, Joe. I appreciate you sharing that. And is there anything else relative to our conversation, to the company, to your future vision that we haven't discussed here today that you feel is relevant for the listeners?
Yeah, I mean, I talk about a lot of the good. The hard part right now is raising capital. You
Yeah.
mentioned we closed the first part of our Series A, the first tranche of it, but there's still a big chunk of it open. And buying real estate is predicated on a couple things. You've got to find the right property, and then you've got to go out and convince investors that this is a good investment for them over a long horizon.
Hmm.
So, the capital raise is still open. We're still raising money. There's some pretty attractive terms for qualified investors to take a look at. But that's a risk to any real estate investment right now is arranging capital. It's always a risk in any market, but raising capital right now, whether it's on the equity or debt side, is hard. So as your listeners are out there looking at investing or doing their own thing, you want to underwrite scenarios where the cost of capital is higher than you hope it is. But go out and plan to pay a little bit more and it take a little bit longer. And even I, who've raised over $1 billion in my career, this is one of the harder fundraisers that I've ever done. I've met with more people. I hear no just like everybody else. Fortunately, I turn a lot of no's into yeses because I think our story holds water and it's a good strategy that people can relate to. But again, raising capital is a big part. We're actively doing it every day. That's my job. And I wish I could tell you it was as easy as it was, 4 years ago. And it's not. And that's
Yeah.
something people need to be cognizant of. But if you have capital, if you're sitting on dry powder, it's a great time to invest, and it's a great time to do it into yield-driven assets like commercial real estate.
Yeah. But is most of your capital source, is it retail capital or
Yeah.
okay.
Yeah. So right now, everything we're raising is kind of through high net worth, family
Mhm.
office, friends and family. We're out beating the streets and hosting
Yep.
local events and kind of running the circuit around the country and panhandling for money on street corners when I have to.
Gotta
But
do what you gotta do, right?
Yeah, absolutely. I'm not shy. I still have some humility in me, even though I've had a very
I
fortunate
think that's
career.
a true definition of a real successful entrepreneur, right? Get pushed into the corner and times are tough. You come out swinging even harder, right? And ride through the downtime. So,
Totally.
no, that's exciting. Yeah, I appreciate you coming on the show, Joe, and sharing your insights and all the great things you guys have going on over there. For those that want to learn more, they want to learn more about the opportunity, maybe get in contact with you. Where's the best place to track you down?
Yeah, so website healingrt.com or myself, Joe at healingrt.com. I respond to all the emails. I'm a pretty active CEO. I would consider myself a field general. I'm out there with the team every day looking at properties, talking to investors. But again, yeah, healingrt.com is the website. There's an investor portal there, or hit me directly at joe at healingrt.com.
All righty. I appreciate you, Joe. I appreciate you coming on the show today.
Yeah, Kevin, it's been great, really enjoyable, and I appreciate you having me on, and look forward to answering any other questions that people may have.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Butt, wishing you huge success. Take care now.